You're welcome to the Economy and Politics Conversation on Ottoabasi Abasiekong. This edition will discuss Nigeria's 2025 monetary policy approach and impact on households and businesses. And my guest is Mr. Terver Audu, a macroeconomist with Proshare. It's great to have you on the program, Terver. It's been a while.
Yeah, thank you for having me. My first time this year.
Yeah, and it's Happy New Week.
Yeah.
Looking forward to a great week. Let us begin by examining our current macroeconomic data. What is the current state of our economy, even as we reflect on 2 years of the administration of President Bola Ahmed Tinubu?
Okay, that's a very important question, I must say. When we say the current state of the Nigerian economy, you could be referring to the current state relative to what happened yesterday, maybe relative to what happened last week, or last year, or some years back. The Tinubu's administration in particular has been in office for about 2 years now. A lot has happened, both the positives, negatives, and we see that there's a lot that needs to be done. But to better appreciate what the current state, or give us an understanding of what the current state of the Nigerian economy is, it would be intuitive to, take a flashback at where we are coming from, what the numbers have looked like over the years. So you look at key indicators like the inflation, 2002, somewhere around 18%, 2003, taking us to 22%, then to above 30%, 33%, within this same period in 2024. Currently with the rebasing, we've seen some moderations, specifically 23.75. So it shows you that there's been persistent pressures over this period. This same period, we've seen exchange rate move from 500 or somewhere slightly over $500 a dollar. That should be like 2002. Currently, the dollar around naira to dollar rate, I think we have 1,500 naira and 1,600 naira. These are all pressures. What is the price of PMS? What is, the price of electricity and all of this? It shows you that a lot has happened. Now, within this period, we didn't just have some of these pressures in place. We've had the government, come out with series of reforms, from the subsidy removal, the tax reform having, significant success. We've had the markets have seen the ISA Act. We've had the student loan initiative, the cash transfer programs, and many other initiatives had, come in place. And, the external economy have showed good signs. We've had exports being surplus. We've had, look at our foreign reserves. Well, it's somewhere around $38 billion. And you look at our overall balance of payment at the end of last year was twice what we had, the year before. That was somewhere slightly over $6 billion or so. Now, it tells you that the economy has had this, mix of hot and cold. There's been that hot and cold here and there. But then you transition away from what the external economy and their macros look like and come down to the household. How have the household felt? Everything that has been happening so far, it's going to impact the businesses. It's going to impact the household. So to what extent has it aided the investment landscapes and businesses? To what extent has it aided the welfare and living conditions of households? So far, I think that's not really, the conditions are not really desirable. Even though we've seen the indicators telling us that there is this sense of confidence coming back to the economy so far. So overall, we would say that the Nigerian economy is at a pivotal phase. The Nigerian economy is in a phase of transition where we are seeing reforms, and perhaps these reforms will still need some time. But there is that need for clarity and precision on what exactly we need to achieve within this time. If we say inflation is moderating, if something is falling, something must be rising. Okay, so even the inflation is falling to where? So it is in that bid that maybe you would see the policy makers like this MPC wanting to remain cautious, because you remember the story of the tortoise. He was falling. He ultimately felt like what happened to his shell. It got cracked. So we have to also stay cautious of the kind of moderations we are seeing now. because it may be too early to celebrate, and there's a lot that still needs to be done. But overall, we are in a transition phase, and we would see a lot still happen later on.
So you say we're in a pivotal phase,
Exactly.
transition phase. A lot of reforms have happened. We still need a lot of clarity. And of course, the monetary policy is cautious. That even brings me to the monetary policy part. Of course, kudos to the Proshare research team. We did a pre-monetary policy committee meeting analysis where the analysts you interacted with your submissions showed that they were going to hold all the parameters, including the monetary policy rate, and that happened. 27.5% and other parameters retained. And of course, in your post-analysis, you highlighted further, of course, the issues around being cautious. So I'll also put it as being dovish in terms of monetary policy stance. But looking at the next monetary policy committee meeting, what should we be expecting as it relates to the current macroeconomic conditions?
Well, you are actually spot on there. Proshare analysts were quite accurate. We recommended a hold in policy rates, and that was exactly the outcome of the CBN MPC meeting this May. Now, the reason for this particular decision, even though some were calling for a cut in rates because of the challenges the rates may pose to real sector of the economy in terms of the lending cost. But the reason may be, to anchor expectations, for perhaps the drivers of inflation. You want to also anchor exchange rate.
Yes.
And then you would want to be cautious because of what is happening in the external economy. Because someone somewhere is making some policies and everyone is at the edge of their seats. Oh, today there's tariffs, tomorrow there's no tariffs.
They're posting tariffs.
And
then,
aside from the trade, the issue of deficits, the levels of debts are making certain economies to panic. So all of these are uncertainties from other parts of the world, the external economies, that could have some transitional effects on us. So it was definitely wise, perhaps, to, maintain a cautious position at this time. So perhaps, and then you would want to remain. There are signs of optimism, I would say, because the rates were in hike. So there are signs of a cautious optimism, if I would put it that way. Now, if looking ahead, what will the MPC likely decision likely be when they meet? The next meeting will be in July, July 21st, 22nd. The decision they make then would depend on a wide range of considerations and perhaps macroeconomic parameters. What would inflation look like between now and that period? If it sustains this moderation, it's telling us that, okay, we could do some cuts, maybe 25 basis cuts. What would be happening to exchange rate? Would it sustain the stability, or would it go on a volatile roller coaster again? Would we see that? Now, if it sustains that stability, yes, it's signs that we could cut rate. But even if it sustains that stability, you have to also look back at what is happening to capital flows. You have to look at, what is happening to your reserve movement in your reserves. Now, these are all the components you want to look at. What is happening at the global, economy? So the risk are some of the considerations that the CBN MPC will be looking at. And I would sum this by saying that the decision should be data-driven and would be data-driven.
I like how you closed. The decision should be data-driven. Because if you look at the role of central bank chiefs today, growing up, I used to see that central banks could take their decision without, but nowadays you see, for example, what's happening in the US, Jerome Powell was summoned last week by President Trump to explain why he will not cut interest rate. I'm like, really? And even the other issues between President Lula of Brazil and his central bank chief. And I mean, central bank chiefs should be allowed to just work with data to take their decision. Very, very important. And let's look at the state of the economy and challenges of households and businesses. We are really in a very interesting phase. It ranges from energy costs, that's keyed into transportation costs, foreign exchange, you've raised that issue, and then, of course, interest rates, where you talked about businesses and their challenges. So when you look at plus insecurity, especially in the north where we have food belts, what are those opportunities for fiscal and monetary policy to align in a way that it can address the structural issues? Because like I highlighted, central bank chiefs work independently, but we have to work with fiscal to ensure that the stability. Every household in the world wants stability.
So I think you're spot on there by highlighting the challenges. These are some of the challenges we still face, even though there is that sense of fragile stability we are having in the economy now. If the households, I'll give you some context to the challenges the household are facing. Maybe with this example, if you look at something as little as egg, 2 years ago, you could buy egg maybe 50 to 100 naira range, but today a person would want to consume egg and it's somewhere around 250 naira. That's a lot.
Just for one
Now,
egg.
within this period, to what extent has the real value of this person's income increased? Within this period, to what extent have the real sectors of the economy been supported through the diverse, an array of reforms and policies from the government? So it's been constraining, it's been challenging, and that is why you see the CBN, embrace this high level of discipline and say that we want to anchor, we want to target inflation, and there is that very high attention given to what is happening to the FX market too. Now, when you combine all of this together, the real opportunity, like you said, is simply in terms of policy alignment.
Yes.
While monetary policy is trying to drive some form of macroeconomic stability, the fiscal reforms should also set in to complement it. So we need fiscal prudency, we need targeted and deliberate fiscal efforts, because there is a limit to what the monetary policy can do. Say, for instance, pressures from flood. You hike or reduce interest rates to whatever limit you want to, move it or change it. But to what extent will it have impact on that flood? You also want to consider other things like these are structural issues, the energy, the electricity, the issues of, not just the cost of education, the medications, pharmaceuticals in general, and many structural issues that are bothering us. So there are limitations to what the monetary can do. So there is a need for us to consider what is happening to the fiscal policies, what is happening to investment policies, because that is crucial. FPI's inflows, that's hot money. FDIs, equity flows, that's what I think we need. So the real opportunity, I would say, lies essentially in that policy alignment, and then in perhaps the government trying to also, the pressures on our budget may be too much. So alternative means of financing would be, at this point, to be very crucial too.
Very crucial, very crucial. Like that. The ability to transmit monetary policy in a way that it impacts the interest rate environment remains a very big challenge in Nigeria. From your perspective, what are the practical ways we can begin to achieve this so that the business environment and every other person can begin to feel the impact of transmission of monetary policy?
Yeah, so this is a very interesting question. And when you look at our climate and what the CBN has done so far in terms of monetary policy hikes and what that monetary policy is supposed to do, there's been this disconnect. So I think when you look at why I say there's that disconnect is because on the one hand, yes, we want to raise the rates to curb inflation. But on the other hand, there are certain benefits that want to, typically or theoretically, you would want to see. Because raising rates is crucial to what happens to your capital flows. What happens to your capital flows is crucial to what happens to your reserves. What happens to your reserves is crucial to what happens to your exchange rate and your currency. That is the typical transmission mechanism. And then from there, all of this is crucial to what happens to the overall stability. I would name it the inflation, which we've been trying to target.
Yeah.
So to what extent has the interest rates been able to guarantee that high inflow of FDIs, equity investments, and not just FPIs?
Yeah.
So the very first thing I would say we should consider should be what the government have been trying to achieve for a while now: more investment flows, equity stock investments. Proshare has also argued for leveraging the capital markets. There are a lot of, idle state assets and all of that the government could, identify. Can we take this to the market? The Asian economies have actually leveraged this a lot, by the way, and the Middle East countries, they've leveraged that a lot. So do we have public assets that we could bring to the market? Try to also raise some capital, equity funds, not, borrowings. So these are some of the measures, some of the crucial measure Proshare called for, and we capital market report for 2025 was actually based on this. Now, other thing to consider at this point is what these policy rates also do to borrowing costs in your economy. How long or to what extent are you going to raise rates? Because this is going to impact borrowing costs.
Yes.
Borrowing costs impacts real sector productivity, because cost of accessing funds is going to be high. So I think incentives, both from the fiscal, from the monetary, the CBN could decide to, collaborate with development finance institutions at some point. If you look at their balance sheet in 2024, they actually reduced, intervention in development financing and all of that. But perhaps collaborations with development finance institutions too could be considered. So there are a broad range of considerations that could be looked at.
Yeah, that collaboration with DFIs would be very, very important. And as we wrap up in a few minutes, what is the outlook for the monetary policy environment remainder of 2025?
Well, this is a tricky one, I must say, because conditions currently show some form of stability, but the stability is fragile. So there would be a need to sustain the measures or leverage or consolidate using more targeted policies, both from the fiscal, from the monetary, and other sectors of the economy in order to sustain the stability. Now, should the stability be sustained? Yes, we would see along the line monetary policy, considerations for monetary policy rate cuts begin to set in. But there are risks too. Inflation, insecurity, because over 3.3 million people at the end of 2024 remain internally displaced due to insecurity and conflict in Nigeria. Now, you also want to look at what is happening, to what extent will the volatility in the external markets continue to, sustain themselves. So if the risk carry a lot of weight in the next quarters to come, I think we would see the monetary policy sustain a hawkish position. But then, if the moderations we are seeing now can be sustained, the stability can be sustained, our reserves can be supported, investment flows, and then the communication, not just from the CBN, but broad cross-sectoral communication to households is very important at this point to guiding, whatever happens to the decision of the MPC, in the coming quarters.
It's very clear that we need to address the disconnect between monetary policy transmission and the real sector. We need to look at our investment policy as a country. We need to attract foreign direct investment, not FPIs.
Yeah.
And like Proshare has also advocated alongside other economists, we need to put the pressure more on government.
Exactly.
Government of President Bola Ahmed Tinubu to bring on board the leveraging of state assets
of course,
and enterprises. through the capital market. We have to put that pressure. Deal book, there's a register. We need to have that set register in place.
Yes. We've seen Mofi actually do.
Ministry of Finance and Competence is there, but we have to put that pressure. We need to see things happening through the capital market. Thank you very much.
Thank you.
Terver Audu, Macroeconomics with Proshare. Always interesting having these conversations with you.
Thank you. Likewise.
Thank you once again.
Thank you.
So our viewers, if you want to get further insights on this conversation, visit the Proshare website displayed on the screen and follow our social media platforms to engage further. Until you come your way again, enrich yourself with knowledge of socioeconomic developments around you, it is wise. I'm Ottoabasi Abasiekong. Thank you for watching and bye for now.